Ladies and gentlemen, good day and welcome to Solar Industries India Limited Q4 FY22 earnings conference call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manish Mahabur from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Aman. On behalf of Antique Stock Broking, I would like to welcome all the participants on the call of Solar Industries. From the management, we have Mr. Manish Nuwal, Managing Director and CEO, Mr. Suresh Menon, Executive Director, Mr. Monish Agrawal, Joint CFO, and Ms. Shalini Mandana, Joint CFO on the call. Without further ado, I would like to hand over the call to Mr. Nuwal for opening remarks, post which we will open the floor for Q&A. Thank you, and over to Manishji.
Thank you, Manish. A very good morning to our dear stakeholders and well-wishers. Welcome to yet another conference call of Solar Industries India Limited. My name is Anshul, and I would like to welcome you all to the fourth and final investor conference call for the year FY21-22. To begin with, I would like to remind you that during this call, we might make projections or other forward-looking statements regarding future events and about the future financial performance. Please remember that such statements are only predictions. Actual events or results may differ materially, and our website will be updated with all the relevant information timely. Now I would request Solar's MD and CEO, Mr. Manish Nuwal, for his opening remarks. Over to you, sir.
A very good morning to all of you. We are pleased to announce that our company has achieved a healthy revenue growth of 57%, with profits increasing by 58% for the year despite of supply chain and geopolitical disturbances. The best ever result in the history of our company reflects an all-around performances across sectors and geographies wherever we are operating. We are all set to enter FY23 with continued focus on execution of our key priorities and strategic investments to increase the product portfolio and market presence. We are targeting a business growth of 30% plus in FY23 despite the headwinds we may face as a part of the global economy. Our optimism is built on expected growth from all the operating sectors like mining, housing and infra, defense, and our overseas business. With the Government of India's substantial increase in allocation and policy support for housing, roads, railways, and defense sectors, we see a very good opportunity for sustained growth in our businesses. Based on healthy performance, our company has proposed a dividend of rupees 7.5 per share for the current year as compared to rupees 6 per share in the previous year. Now I will hand over the call to Aanchal to take you through the financials. Thank you.
Thank you, sir. It gives me immense pleasure to brief you with the financials of back-to-back highest quarters in the FY21-22. A positive momentum in all sectors where we operate has laid a strong foundation for sustainable growth in future also. Key highlights for the fourth quarter are: the consolidated revenue is up by 66%, that is 1317 crores versus 791 crores. Explosives revenue is up by 89%, that is 788 crores versus 418 crores. Our explosive volume has increased by 11%, that is 119536 metric ton versus 107336 metric ton. Realization of explosives has increased by 69%, that is 65948 versus 38922. Coal India as a percentage initiating system revenue increased by 5%, that is 117 crores versus 111 crores. Coal India as a percentage of revenue stands at 20% as compared to 18%, whereas revenue is increased by 89% year on year to 262 crores from 139 crores. Non-CIL institutional is up by 122%, which is 198 crores versus 89 crores. Housing and infra, the revenue was up by 58% to 385 crores from 244 crores. The export and overseas revenue showed an increase of 34% year-on-year to 389 crores versus 291 crores. Defense revenue is up by massive 270% in the quarter to rupees 72 crores from 20 crores. Coming to the cost breakups, raw material consumption increased by 87% from 437 crores to 816 crores. Employee cost has increased by 34% year-on-year from 66 to 89 crores. Other expenses has increased by 20% from 124 to 149 crores. EBITDA, we reported an EBITDA of 264 crores against 167 crores in the previous quarter. Interest and finance charges cost is up by 41% from 10.48 crores to 14.78 crores. Depreciation has increased by 32% from 23 crores to 30 crores. PBT increased by 64% from 134 crores to 219 crores. PAT increased by 84% from 95 crores to 175 crores. These were the small updates for the quarter. Let me take you through the yearly financials now. The revenue for the year is up by 57% year-on-year from 2516 crores to 3948 crores. Domestic explosives quantity is up by 22% from 333,082 metric tons to 406,372 metric tons. Realization of domestic explosives increased by 45%, that is from 34,798 to 50,417%. Revenue from domestic explosives increased by 77% from 1159 crores to 2049 crores. Initiating systems revenue increased by 23% year-on-year from 325 crores to 398 crores. Coal India as a percentage of the basket is almost at the same level, that is contributing around 18% of the sales from 17% in the previous year. It has grown by 69% year-on-year, contributing to 715 crores. Non-CIL institution has grown by 103% and stands at 537 crores. HMI has grown by 54% year-on-year and stands at 972 crores. Export and overseas showed an increase of 37%, stands at 1435 crores. Defense has shown a rise of 21% and stands at 249 crores. Coming to the cost breakup, raw materials. The material cost is up by 73% year-on-year from 1347 crores to 2327 crores. Employee cost is increased by 26% from 231 to 290 crores. Other expenses have gone up by 38% from 424 crores to 583. EBITDA is increased by 43% from 536 crores to 767 crores. Interest and finance is increased by 11% from 45 crores to 50 crores. Depreciation is by 17% from 94 to 109 crores. We recorded a PBT of 607 crores compared to 397 crores, which is an increase of 53%. We recorded a PAT of 455 crores compared to 288 crores, which is an increase of 58%. This is all from our side. Now we'll be happy to take any questions, comments, or suggestions that you may have. Over to you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question may please press star and 1. First question is from the line of Sujit Jain from ASK Investment Managers. Please go ahead.
Manishji, our compliments on a very good set of numbers. If you can split your 30% guidance into estimated volume and pricing growth for FY23.
The 30% annual growth guidance, what we have given, is based on the situation in our housing and infra, Coal India market, Singareni, and exports and overseas. And in this year, we are also likely to increase defense sales substantially. So based on the growth in various sectors, we have given a guidance of 30% on overall business.
Is it safe to understand that close to about 15% to 20% could come from pricing?
Yeah, that is what we have maintained in the previous annual conference also, that we are likely to increase our volume by 15% on annualized basis for next couple of years. For FY23 also, we maintain the same stand that we are targeting a volume growth of around 15%, and we are expecting that around 15% will be a price rise, which can be based on an average price of the whole year.
And in overseas FY22 sales, there's a 37% value growth. If one looks at the realization increase that you report for explosives domestically, which was of 44%, how does one read into this number? Does it mean that there has been substantial currency translation which has led to this little dilution to 37% growth, and so volumes were robust, or volumes were kind of muted in overseas business?
As far as overseas market is concerned, our volume has increased by around 10%, and the balance has came from the price increase. In overseas market, the price increase of our raw material is not as significant as it has increased in the Indian markets. So gradually prices are increasing, and we are increasing our prices in the overseas market as well. As far as translational loss is concerned, in this year, the translation loss is around 180 crores.
Sure. And in terms of our hedging policy, how much of our sales we hedge typically?
As far as our policy is concerned, we are completely hedging the imports, whatever we are doing, and on export side, we are keeping it open. And as far as various subsidies are concerned, we are trying to hedge as much as possible, and it is as per our hedging policy, forex policy.
Sure. And one last question is, one is following the interesting developments that you've kind of done. You've tested your loitering munition in Ladakh successfully, as some of the media reports are saying. How does this arrangement with this company, which requires 45%, work in terms of we eventually getting contracts with the defense forces?
Just repeat your questions again, because there was some slight disconnect at my end.
Yeah, I'm saying Z Motion Autonomous Private Systems Private Limited, in which we've acquired 45% stake. There are media reports that you have successfully tested the loitering munition, in which you are working in tandem with Z Motion. How does this partnership work in future to get the contract from defense forces in loitering munitions, etc.?
And like we have already shared that this company Z Motion has the expertise in the domain of making unarmed aerial systems, and Solar has an expertise to produce or weaponize those UAVs. So it's a strategic investment, and that is going to strengthen our initiative to introduce all those weaponized UAV systems, and that is for offensive and counter-drone system as well. So I believe our strategic investment in Z Motion is going to strengthen our portfolios for this sector.
Sir, Manish, all the best. Thank you.
Yeah, thank you.
Thank you. We have the next question from the line of Absha from ASK Investment Managers. Please go ahead.
Yeah, hi Manish. Congratulations to you and the entire Solar team. In my 20 years of observing Solar business, I'm sure you'll agree this probably is the most defining year in terms of outcome.
Thank you very much, sir.
Manish, if we look at in a year where every single business is fired, whether we look at our coal business or B2B or infra business, or even defense, which was lagging for a while, and of course the international. In all of these, it's easy to get particularly satisfied because every single business is fired, and every single business is delivered remarkable kind of numbers. In all of these great positivity, what are the things that worry you, or what are the things that you see as potential challenges which are not visible in numbers?
So the only challenge which everybody is facing at the moment is sourcing raw materials on time and at a better prices, because what is happening that whatever price rise has happened in the last 1 year or specifically in last 6 months is mind-boggling, and no one has expected the price will rise to this extent. And as a result, we are also facing lots of challenges in increasing our prices. The raw material price of ammonium nitrate has increased by almost 79% in the previous year, and we are unable to increase the same prices to our customers. But we are taking up the issues with Coal India and Singareni, and hopefully in couple of months we will be able to raise our prices to the tune of increasing raw material. So this is our biggest challenge at the moment, to source raw materials and continue our supply chain and passing on the impact of AN to our customers. So this is our biggest challenge as far as our current business is concerned. As far as defense is concerned, over the last couple of years, we have already passed through the initial turbulences and challenges. We are at the moment are in a better position, and we believe that all those basic or initial challenges are not there for us at this stage. As far as overseas subsidiaries or overseas businesses are concerned, we have started doing much better than the previous year. And in FY23, we are going to see a total turnaround in our overseas business. That's why, despite of various challenges in procurement side, pricing side, we are maintaining that we will be able to have a healthy or sustainable EBITDA margin of 18-19%, and we are likely to increase our top line at 30%. So this is based on the challenges and the opportunities what we have and whatever efforts we have put in last couple of years. So those are likely to reflect in our numbers in the coming year as well.
And given the fact that each different business is different gestation period and fructification period, and each of the 5 lines of main activities we've seeded in a different way over a period of time, can we, would you really say that now will we take into account not just the current year where you have guided for 30% plus kind of a growth, but on a more longer term basis, would we say that each of our businesses is positioned in such a way that there is a healthy long-term growth virtually based on all the hard work and the foundational work which has happened? Or would we say that beyond the current year, there can again be, kind of unpredictability?
So we believe that the efforts which we have put in last couple of years, especially in last 5 years, so whatever business we have increased, say we have almost doubled in last 4 years. We believe that the opportunities what we have and the efforts which we have already put and which we are going to do more in couple of years, we believe that same kind of growth rate we should expect in next 4 to 5 years.
Which means about 15% volume growth and whatever may be price increase plus or minus.
Yeah, we expect that 15% should be in the volume terms, or around 10 to 15% should be in the realization side, which can vary between 10 or 5 or 15. So we believe that on an average, we should be able to grow at around 20 to 25% on compounded basis.
For 5 years also.
Yeah, this is our plan.
Oh. And at the beginning of the year of last year, that is financial year 2022, Did we have an inkling or did we have an anticipation that financial year 22 would turn out to be such a remarkable year? Or it kept falling in place as the year progressed?
So actually, whatever guidance we gave was based on our market feel that we should be able to grow at 30% in the FY22. But that was based on our volume growth of around 15-17% target, and balance was from the price increase. So in this year, our volume has increased by around 22% in domestic markets, which is little more than what we were targeting. Pessimistically, if we say that when we give a target of say around 15-20%, so definitely our aim is always more. And on conservative basis, if we calculate or if we take all the risk factors and all those things, so definitely we have to be on a conservative side. And based on that, we gave a guidance of 15% volume rise and 15% price rise. So this year we have definitely achieved more than what we have anticipated.
Sure. Thank you, Manish, and once again, congratulations on a remarkable year to you and the entire Solar team.
Thank you very much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the group, please limit a question to 2 per participant. If time permits, you may join the queue for any follow-up. Thank you. We'll move to the next question. That is on the line of Rohan Gupta from Edelweiss. Please go ahead.
Maniji, good morning and congratulations on a very strong set of numbers given the current challenges.
Sorry, Rohan, your voice is not very clear. Request you to use the handset, please.
Hello, Maniji, it's better now?
Yes.
Yes, better.
Okay. Sir, good morning and congratulations on such a strong set of numbers despite the challenging environment. Sir, a couple of questions and I'll come back in queue. Sir, first is on that we believe that our pricing in the industry is definitely linked with the raw material prices. However, the margin per kg or per ton which we enjoy are generally fixed. It's surprising and it's a positive surprise to see that our percentage margins actually at almost close to 20% for the current quarter has been maintained despite the rising or almost 50% kind of price increase. So just wanted to understand, sir, this it means that per ton margins would have definitely improved to match the percentage margins. So if you can elaborate a little bit more that how the pricing formula is working and what has led to the increase in per ton margins for the quarter.
Rohan, you have raised a question related to how we are maintaining margins even at a highly increased prices of our raw material. There is a formula and there is a fixed component in that, and based on that our prices are increasing based on our raw material. But like we have been saying that it is difficult to pass on the complete impact of price rise to our customers. Even our formula doesn't capture the kind of rise which we have seen in last couple of quarters. And because of that, our margin as far as in percentage term has saw some reduction. If you see at a raw material percentage, it is now around 62% compared to the previous quarter of around 59% and 55% on the year-on-year quarter last year. So this is the reality. We are also facing the same challenge and we are trying to pass on the price rise to our customers. So it's a continuous journey and this kind of situation nobody have seen in the history actually. So we are also part of that.
So rather than concern, it was a positive thing for me actually. Just wanted to understand a little bit more. So when the customer pricing is more in terms of percentage margins being maintained or per ton margins being maintained, so?
Actually, our product basket is not only on per ton basis. Some pieces we are selling on numbers, some pieces in meters, some is in other kind of unit of measurement. So it is very difficult to really respond to this question of how we are maintaining margins on per basis. It's a basket of various SKUs which are on different terms. So that is difficult. What we have maintained that we are trying to have margins of around 18 to 20%, even at the highly elevated prices of raw materials.
Right. And sir, going like for this year also, the overall EBITDA growth for our company has been much ahead, or like 64%, which is much higher than the volume growth which we have reported, close to 22% for the company. So definitely that in terms of the pricing environment, the rising price environment has helped us in higher EBITDA growth. Next year also you are still expecting close to 15% kind of price-led growth in your guidance of 30% revenue growth. So one should expect that the EBITDA growth will be also close to, or profit growth will be more than 30% in your guidance, because that is more to do with the revenue guidance. So in terms of profitability, do you maintain that the profitability growth also will be in sync with the revenue growth?
Like I have said that raw material prices has increased a lot. Because of that, our EBITDA margin in the whole peninsula is around 19.43% compared to 21% in the previous year. So looking at the highly elevated raw material prices, we believe that any margin around 18 to 20% should be sustainable, and that is what we are maintaining for the coming year as well.
Okay. And so just one on the raw material availability, you mentioned that it's a challenging environment, especially the Russia-Ukraine crisis going on, and Russia being the one of the key supplier of AN. So how is the availability issue which we are tackling, because there is only one large supplier in the domestic market? So are we exploring other markets to compensate the loss from the Russia, or how much of our dependence was from Russia?
So our supply chain team is working on all the possibilities to mitigate this kind of situation. And fortunately, we were able to overcome the current challenge. We believe that in coming year also, we will be able to maintain the same kind of supply to our customers. And we are confident we will be able to handle this situation.
Okay, sir. I will come back in queue for the further question. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Bhavin Vithlani from SBI Mutual Fund. Please go ahead.
Thank you for the opportunity, and congratulations to the entire team of Solar for a stellar performance. I have three broad questions. One is on the availability of the raw material. Second is on the performance of the international subsidiaries, especially South Africa and Australia. And third is on the defense part. So on the first question on the availability of raw materials, if you could just help us, because Russia, Ukraine were a very critical suppliers for ammonium nitrate, and that supply line having been broken, if you could just help us understand on the availability of raw materials, and are we seeing any capacity increases from the domestic suppliers? So any outlook on that will be very useful.
Yes. Currently, I think the government is also looking into this, and we see a small increases in capacities of domestic manufacturers of ammonium nitrate. And our supply chain team and the procurement team is actually sourcing from other countries. I think we should be able to sail through going with the increase in the domestic production, and as well as sourcing from other sources other than Russia and Ukraine.
Sure. Any substantial increase in the capacity domestically? There was an expectation that Deepak Nitrite is going to commission a large volumes in this year.
It will take some time for them. They are on that track only of substantially increasing their capacity, but that should take some time. But they may make some incremental increase in their capacity in this current year.
Sure, that's helpful. The second question was on the international subsidiaries, and for us, we've been seeding South Africa and Australia in particular, and these were anticipated to be critical growth drivers. So if you could just help us, how has been the performance of these two entities in the financial year 22, and what are you anticipating for fiscal 23 especially for South Africa and Australia?
Yeah, our subsidiary-wise details, financials would be actually being published along with our annual report. So the details would be available there. Just to give you an information that in both these places, COVID played a crucial role, delaying our project in the last couple of years, particularly in Australia. We should be shortly starting our production facility in Australia. And as soon as we do that, we would definitely be making this announcement in Australia. As far as other volume growth in Australia is concerned, it is on track. And in South Africa, again, the same issue of COVID. 2 years, there was a delay, but I think this year we should be on track. We expected it to be on track last year, but again, COVID was a spoiler. I think this year we should be on track.
Sure, that's useful. And lastly, on the defense part, there were news report on successful test of the Pinaka enhanced version, and we also have the Pinaka guided. If you could give us a color on where are we in this project, do we expect any RFP to be issued this year, and the path forward on the defense?
Yeah, we have Hello. Yeah, Bhavin. We have completed most of the trials, and in next 3 to 6 months, we expect the RFP should also come. And once the same comes, we'll update.
Sure. Thank you so much for taking my questions.
Yeah, thank you.
Thank you. Our next question is from the line of Abhijit Mitra from ICICI Securities. Please go ahead.
Yeah, thanks for taking my question. First question is on the financials, and before that, congrats on a great set of numbers. First question is on consolidated financials. The other expenses have come off on a quarterly basis. So just to understand the nature of this, where is this a normalized other expense run rate on a consolidated print that we can expect, or there can be variations in there?
Yeah, hi Abhijit, thank you. As regards to other expenses, this quarter we had some forex gains of around 16 crores as compared to the losses in the previous quarter. And secondly, we had actually good collections during the years with the efforts we have been putting to reduce our debtor days, which is reflected in the number of debtor days, which has come down to 50 from 66. As a result, the provisions as for books that had to be made, some reversals were there in the provisions.
Okay, so what would have been the total, forex gain plus reversal amount? It would be around 25-30 crores?
Yeah, roughly.
Okay, great. So the second question is regarding further investments. If you can give the CapEx guidance for the next couple of years, and also since Z-Motion has been selected within as one of those 14 participants, initial set of participants for drone manufacturing PLI. So what is the outlook, or what are the possible CapEx that we are looking at to capture that opportunity? So this would be my second question. Thank you.
Yeah, the CapEx for the years planned around 400 to 450 CR, and keeping in view the strategic investments we have been making. So that includes, Z-Motion also.
Okay. If you can break it up into explosives, overseas, and defense.
That will be difficult. So as in when we do that, we'll update. And all depends on coming opportunities also.
Okay, great. Thanks. I'll come back in the queue.
Yeah, sure.
Thank you. The next question is from the line of Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So just in terms of the raw material price increase which you have not been able to pass on to your clients, what would be that quantum? Is it like a 4-5% increase, or is it a number larger than that?
Yeah, as far as we cannot give the exact percentage, but on an average there is a lag of almost 3% on total basis.
Okay. Okay. So margins to that extent, assuming raw material prices stabilize, can improve from the fourth quarter exit. Is that a fair assumption to make?
It will take some time as per our business sense is concerned. It is going to take time, and margins from 18 to 20 will be a reasonable guess on our part that we should be able to achieve. And maybe by the end of FY23, there should be some kind of settlement in prices. And definitely, once those prices start settling, we should be able to reach we should be able to realize EBITDA margins of plus 20%.
Sure, sure. And so the other thing is, the volume growth that you have kind of achieved in the current year. Supply chain issues have been around not just for you but for the industry. But given your balance sheet, given your size of procurement, you would have been able to procure it much better. So, have you seen market share gains both in the B2B and the B2C part of it in the domestic market? Because I see a sharp improvement in the current quarter. So
Sorry to interrupt, Mr. Ghosh. Your voice is breaking.
Hello. Is this better now, or am I still breaking? Hello.
This is better.
Yeah, sorry. So just repeating my questions, I see a very sharp jump in the housing and infra revenues in the current quarter on a Q-on-Q basis. There is almost a 75 to 80% kind of a revenue increase. Would you attribute that to market share gains because raw material would have been a much bigger issue for some of these smaller players? Some color there will be helpful, sir.
No, if you look at the increase in housing and infra, then definitely we have increased our sales to that sector. But definitely Coal India and institutional market also has done fairly well. Our volume has increased more than this to that sector in this quarter.
Correct. Yeah. But would you attribute some amount of market share gains in some of these segments because the smaller players are not able to procure the ammonium nitrate to that extent? Any thoughts?
Yeah, I agree to your view that whenever such kind of situation happens, the stronger or better people will definitely increase the market share because of their ability to procure material and to sustain such kind of shocks in the system. Definitely we have increased some market share. The exact number I don't have right now, but this is based on our market feedback, and that is a part of our strategy as well.
Okay. So in light of the supply chain issue and the smaller players getting a little weaker, overall demand momentum being strong, is there any thought of the overall larger capex plan that you are referring to, the two other units beyond Nagpur? Any thoughts around it in terms of have you been able to finalize that, but there's still some time around it?
Like in the last year, we have shared that now we are planning to expand our market presence in different parts of the country. So based on that strategy, we have almost zeroed down on 3-4 land parcels and going to finalize them in a couple of months. So once we finalize, definitely we will share. But it is our part of the strategy to increase the footprints in Indian market. As because we have seen that our ability to give the better product, on-time delivery, and our relationship with customers are pretty well compared to my competitors. So we have no reason to not increase our market presence in the country, and that's part of our strategy. We are moving forward on that path.
Okay. Okay, sir. We hope to hear on that in the next Concall, and wish you all the best. Thank you so much.
Thank you. Our next question is from the line of Chirag Muchala from Centrum. Please go ahead.
Yeah, thank you, sir. So the question is on defense segment. So firstly, can you quantify the order book of defense? And secondly, out of the multi-mode hand grenade order that we had of 410 crores, how much is already booked till now, till FY22?
Yeah, hi Chirag. Currently, the order book stands at around 475 crore. And as regards to your second question, we had to supply 10 lakh pieces. We have supplied around 40% of the same.
Okay. So, is the remaining 60% order will be executed entirely in FY23, or it is likely to spill over beyond that also?
Entirely in this year.
Okay. And any possibility of a repeat tender coming for multi-mode hand grenade?
We expect the same, so as and when that comes, we'll update on the same.
Okay. Sir, second question is on ammonium nitrate. So, sir, at a company level, what kind of inventory can we keep of ammonium nitrate? Because I believe that this is not a raw material which is very easy to keep in terms of inventory over a sizable quantity.
We just track the overall inventory. So the current inventory we have is around 113 days. So that is the average level that will be maintained.
Okay. So ammonium nitrate inventory will be more or less in line with the overall company inventory.
Yeah. This is the total inventory which the company has. Okay.
And last question, sir. As of FY22, what would be our bulk and package explosive capacity in the domestic market, and if possible, our utilization rate?
Sorry, we do not share the capacity on the product purpose as a policy matter.
Okay. Possible to share the utilization rate?
Utilization is very difficult for industry like us. So there are multiple products, and the same capacities can be used for different products.
Okay, not a problem. That's it for me.
Yeah.
Thank you. Anyone who wish to ask a question at this time, they may please press star and 1. We have the next question from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Thank you, Manishji, to give such a fantastic result so far. Can you bifurcate domestic top line and export different separately? How much top line is domestic and how much in export?
The export and overseas is around 1435 out of 1347 crores. So around 2500 is domestic.
2500 crore in and profit margin is same in both the category?
We looked the margins for the company as a whole. So the margin for the quarter stands at around 13%, and the year it's around 11.5.
Okay. Manishji, this question is for you. Any purpose to keep two joint CFO in company? Any specific reason?
There's no specific reason for keeping two CFO. It was a need of the company, so everyone felt there was need for two CFO to join.
Because I track so many companies, but I had never seen any company having two CFO. That's why I'm asking you. It is your prerogative and right to keep whatever you want, but just any purpose to run the company in a smooth way. That is my question.
Yes, this is basically we are a growing company, so there was a need to have, and that was the need for the management to have two CFOs.
Thank you.
Yeah.
We have the next question that is from the line of Prateek Mukasra from RNL Investment Partners. Please go ahead.
Hello.
Yes.
Hello.
Please go ahead.
Yeah, Manishji, congratulations on a fantastic set of numbers to you and your team. My only question is, can you just throw a little bit of light on our defense portfolio? I mean, what products we are trying to come out with, and what is the way forward, and how is government stance? We are listening quite a bit of things that government is trying to indigenize so and so things, and they are really focusing post this geopolitical condition. So how much is the reality? If you could throw light as an industry person, it would be very great.
Sir, like we have been seeing various news articles that Government of India has brought a list of X number of items to be under a list where we can't impose. So every such kind of information is available in a public domain. As far as our company is concerned, we have developed plenty of products in various categories, like we have said that high energy materials, pyros, igniter, fuses, small arms ammunitions, and like rockets. Now we have started missiles, and in last couple of months we have also shared that we have successfully tested drone-based ammunition at our campuses. So we have a complete bouquet of product to take care of various opportunities. Definitely we can't meet all those requirements, but we are working on enhancing our product portfolio, and that is part of our last 5 to 6 years of investment in the same line. And going forward also, we maintain that we will keep continuing investing in enhancing the product portfolio, not only for defense, but for our core business of explosives for mining sector as well. So we will continue on that path.
Okay. Secondly, sir, have we allocated any certain budget for our research and development on our various profile, or as and when opportunity comes, we take on these activities?
Actually, it is difficult to fix any budget at this stage because opportunities are available and we are fully geared up, and we don't see that we should restrict any budget for research and development or increasing the product portfolio. So we have not fixed or not limited our resources on this front.
Okay. Thank you so much, sir.
Thank you.
Thank you. Our next question is from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Thank you for the opportunity once again. Two follow-up questions. One is, if you can help us, what would be your market share in the coal mining segment, Coal India and SCCL in this fiscal year, and also your market share in the infra and the housing segment?
The market share varies between 25 to 30% in various sectors. Difficult to give one single mark for every sector, but on an average, it is varying between 24 to 30%.
And we would have seen an increase in the market share in the financial year gone by.
Yeah, in last 10 years, our market share has definitely increased from 17, 18 to almost 24, 25, and now it is moving towards around 30% on all India basis.
Sure. The second question is on the defense again, and we have seen corporatization of the OFBs, and a larger part of the ammunition was coming from the OFBs. So what's the kind of opportunity that you see now that some of these tenders will now actually come out for competitive bidding against OFBs, which were part of the government entity, which were not coming out? How do you see yourself at this corporatization? Does this actually help you in terms of the growth path, or it's more like business as usual as earlier?
There are a few couple of points on this question. First is that our country definitely has invested a lot in creating a lot of facilities in government run companies like ordnance factories, and that has been privatized only to bring more transparency and to increase their efficiencies to meet our country's requirement. Similarly, we all know that in every sector, private companies have been allowed to enter, and defense is one of that. So we believe that our country has definitely offering a lot of opportunities as far as defense is concerned, because the first advantage for our country will be that once we indigenize most of our requirements, definitely those opportunities will be available for the companies operating into the country. And we are one of the private sector company who has entered into this line of business much ahead than others entered. And going forward, we believe that more efficient enterprises in the country will offer more benefits to the sector as a whole. That much I can express my views.
Yeah, thank you so much. This was helpful. Thank you so much for taking my questions.
Thank you.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Yeah, Manish, in each of our 5 lines of activity, some of the key growth drivers we all are kind of familiar with, that what is driving the demand for our products in the housing or infra or in defense and coal India, etc. Are there, apart from the kind of usual long-term factors that we all take into account to kind of make some kind of a judgment about what the future is likely to be, any other trends or any other factors that you have observed which you think have altered for better our trajectory in any or more of these verticals? Any new dimensions that other than normally what we have observed over last some time, any new factors that have come to your light or that you believe is likely to come to prevail?
As far as the trends on basic economy, which is helping us, we all know about that, like roads, railways, housing and infrastructure. We all are aware of the government policies on these sectors. Defense is one of the rising sectors which we have already discussed. As far as new trends are concerned, we believe that our investments in developing the product for space applications will definitely offer us the long-term opportunities. It will take time, but definitely we will get advantage of our early investment. Similarly, if you look at our recent investments in offering drone-based ammunition, so these are the futuristic products. These are not the old age technology products or already developed products or products which are available off the shelf like products. So we believe that the investments into products for space, investment into products for unarmed vehicle or drone-based systems will definitely offer us good opportunities for our company.
And Manish, while it is hard to make a kind of a categorical statement on the question that I want to raise now, but how much of the growth in the last some time, especially last year, and what we anticipate going ahead, is the growth because externally the factors are favorable and that is driving the growth, and how much of it you would attribute that our strategic initiatives, either setting up manufacturing centers in select international locations or products or building a certain line of activity patiently like in defense, how much in your opinion the growth is kind of outside the firm, and how much of it is coming in your opinion from what we are doing to the business?
So like we have been keep investing in enhancing our global footprints and enhancing our capacities and make them to the global scale has definitely helped us. And after the COVID, we have seen that there is another kind of trend where international buyers want to shift their manufacturing or shift their procurement option apart from China to any other nation who can offer them better supply chain reliability and better product at a competitive prices. So we believe that this effort to build the global scale capacity and to have a global presence is going to help us.
Okay. Thank you, Manish.
Thank you.
Thank you. The next question is from the line of Manish Mahawar from Antique. Please go ahead.
Yes. Manish, I have 2-3 questions. One, in terms of volume growth in the fourth quarter, right? It's broadly 11%, right? Which is, I think, a bit slower or lower as compared to the earlier quarters. So is the customers are a bit of a resistant or have some reluctant to buy considering the higher prices, and we have seen some deferment of revenue into the next year?
Yeah, during this quarter, we had some subdued demand we could see from the customers since the prices have risen to very high levels.
Okay.
Hello?
And sure. Okay. And in terms of some bookkeeping question, in the fourth quarter, what was the translation loss in the overseas subsidiaries? I think annual number is 180 odd crores. What is the number for fourth quarter?
Around 80 crores.
80 crores. And what is the impact on EBITDA?
EBITDA around 10 crores in the fourth quarter.
10 crores, right? And for annual, what is the impact selling for annual basis EBITDA impact?
20 crores, around 2021.
Okay, 21 crores. And the last one, in terms of export and overseas, which is the 1430 odd crores, can it possible to share the breakup in terms of export and overseas?
Yeah, for the overseas, for the whole year, the number stands at 1197 crores.
1197 for overseas, right?
Yeah.
Okay. And last, just a confirmation, Manish, you said a 25 to 30% market share for us, right, for this 17-18% earlier. So this is just a revenue or a volume market share you're talking about?
Can you come with the question again?
Either value or...
No. It's the top line which we had spoken like on 30%. It's on volume.
Volume, right?
No.
No, your question on market share, basically we calculate it on volume basis, not on value terms.
Okay, understood. Sure, sir. Thank you. Thanks very much. Yeah, Aman, you can take the next question.
Thank you.
Thank you.
We have a next question from the line of Rohan Gupta. Please go ahead.
Sir, thank you very much for follow-up opportunity. Sir, one question on CapEx. If you can give some guidance on that next year CapEx, and in what segment-wise, how much you are planning to spend so?
So we have a long-term CapEx plan. Based on that, in this financial year, we are going to spend around 400 to 450 crores. And most of the investments will go for defense and increasing our geographical presence in the country. And some of the investment will be for the overseas expansions.
Sir, would the further breakup in terms of how much planning in defense and how much in overseas would it be possible to share? Like earlier, you used to mention almost 1/3 in every segment. So should we draw the similar number, or it will be different in sector-wise, segment-wise?
More or less same numbers, but more allocation will go for defense-related products, 40% for enhancing the capacities in India and geographical footprint, say around 40%. 20% will go for the overseas businesses.
Okay. And sir, in overseas, are we going to spend aggressively in any of the newer markets this year, or this 20% that is roughly close to 80 to 100 crore rupees spend will be increasing the capacities in existing markets?
Yeah, it's a blend of increasing some new footprint or adding new geography and expanding the capacities in the existing markets.
Okay. Sir, in overseas market this year, the revenue growth has been slightly lower than the in domestic market what we have witnessed. So just wanted to know, is there any that, however we have explored the new markets in last year, any particular reason that why the overseas growth would have been slightly lower in the current year? I mean, we have reached close to 1,400 crore rupees revenues in overseas, 37% growth, much lower than the overall growth of the company. So any particular reason you see that any particular markets didn't perform well, or what could have been the reason, if you can explain?
There is no specific reason to that, but the volume has increased by around 10%, and in the coming year it will be more than 10%. So we are moving as per our target, and in FY23 we believe that the growth will continue at 30-35%, which is based on volume increase plus price rise.
Overseas growth also will be 30 to 35% in line with what overall top line growth guidance which you gave.
Yeah.
Okay. So just last bit from my side. So we have seen in a defense, we are also pretty getting aggressive about the acquisitions opportunity, though small level acquisitions like we did earlier, Skyroot, now Jet Motions. So do you see that there are enough opportunities for investment in this segment, and that will be the way going forward for you, that keep on identifying the opportunities and making investments there?
Like we have already said that we are identifying or we are ready to identify companies which can help us or where we can help them to build our businesses for the future. So we are definitely open to invest in all such kind of opportunities, and investment in Skyroot and Jet Motion is part of that.
So how much money was invested in Jet Motion, if you can quantify the number for 25%?
It is available in the public domain. You should look at that.
Okay, fine, sir. So thank you very much.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to Mr. Manish Mahawar for closing comments. Thank you, and over to you, sir.
Thank you, Aman. On behalf of Antique Stock Broking, I would like to thank the team of Solar Industries for providing us an opportunity to host the call. Manish, would you like to make closing comments?
Yeah, we are thankful for everyone who has participated in the call, and we expect to come back with more fantastic results in Q1. Thank you so much, everyone.
Thank you very much. Ladies and gentlemen, on behalf of Antique Stock Broking, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.